Good morning, everyone. Welcome to the Euro Trade. It is Thursday. It's one day before the end of the week. So if you've had any profits for the week, your job now is to save those profits, especially if all 3 previous days have been winners. So don't mess that up as we head into the weekend. If you're new here, my name is Marcus Stalker D. If you just kind of randomly stumbled across the stream and you're like, well, who is this person? I've been trading for 18 years, and 12 years out of that, I've been a prop trader, specializing in some of the more unusual products such as precious metals and energies markets. I'm not really an equities trader, even though usually at this time of the day, I do like to trade DAX. We don't have DAX yet here, so I am going to focus on the precious metals. But before we continue, please familiarize yourself with the risk disclosure that our lovely moderator Bruno has already posted in the chat. Because while I am a Series 3 qualified trader, I'm not a CTA. Therefore, anything you hear and see on this stream is for educational purposes only. All right, so let's do some housekeeping first. One change on the live accounts is that we have the position brackets back. They were removed initially in the new rollout of the OCOs, but then I guess some people wanted them back. Don't know how I feel about that. I actually quite like the OCO brackets. I was never really a huge fan of having to drag your, position stop and limits to where you want them to be. So for me, I'm going to stick to OCOs because I think they work pretty well for my need. I have a few of them set at the bottom of my dome, and that's how I've learned to trade, many, many moons ago. So I'm going to stick to the OCOs. But yeah, if you like position brackets and you want to just set the constant risk, maybe you just trade one thing that doesn't really change much. You use similar stop sizes all the time. Position brackets are fine for you that you can set in the risk area. So if you switch to position brackets here, you're going to get the old position bracket style. All right, let's do a little review of my trades yesterday on the live account. Now, yesterday I did try to enable my bot, my TopstepX API bots on my live. It actually ran into a bit of a problem that I wasn't aware of before. This is why it's so good to keep testing these. So I reached out to Coach Robert, who's our resident tech expert. And here's what the problem was. So I've been testing the bots in the combines. And as such, you really need to have some sort of a historical bar retrieval method in there. And I have a constructor that does that for me. Now, the problem was that I was under the impression that when you target the live account, it will automatically enable the live data feed as well. That is not the case, so that's what the problem was. So if you are in the live account and you are working on a bot, or let's say now you're in an XFA, but eventually you get moved to live and you want to run the same bot, you need to make sure that you enable the actual historical bars to use the live data. Now here's the API documentation, and this is where it's at, right? So what happens is that by default it will be set to false, so it's going to keep pulling data from the simulated environment. You won't be able to execute an order on the live in that case, so you actually have to change it to make sure that you're using live data. So this needs to be true, and it needs to be forced into the code. It won't do it just by you targeting a live account. It's not going to happen. So it's still going to default to the sim. Just keep that in mind. I wasn't aware of that, but this is why we can work through all this together, right? And Coach Robert was amazing. He literally sorted this out for me. He found what the problem was. Initially, we were like, well, is it maybe the order types that are different for the live? It turned out that it was literally historical bars that were getting pulled from the sim. All right, so my first trade, I only did 3 trades yesterday. Again, very normal for me, 1 to 3 trades. It wasn't really a day to look for any kind of big swings in my products. We had a very crazy day on NQ and on ES, NQ at all-time highs. There's probably a mix of government shutdown and then not having the NFP tomorrow, and also being the first of the month of the new quarter. So a lot of positioning was happening, and it was pretty relentless. So if anyone got caught in yesterday's massive move, here's a little tip. At the end of the month, last day of the month, usually we see unwinding of positions. But then on the first of the month, especially in equities, you will see a lot of new orders stepping in. And this is why you see these sort of moves that are just relentless. So definitely connected to the time of the month. So maybe you can put that into your plans going forward. End of the month, unwinding positions is very likely. First of the month, positioning and crazy trending days. All right, so my first trade, I had the value high. So let's make this bigger for my first trade recap. So the first one was the previous bounce from the value high. I think it was a Baron that was trying to trade this, but I think he got stopped out. Now I had the value high in there, and I waited. I waited for quite a bit because obviously the bot wasn't working, and I was like, okay, never mind. I'm just gonna, look for manual positions. So my first one was, I guess you could call it a standard deviation trade in this case, because it didn't quite go to retest value high again, at least not for this post-Euro close fade. So time of day very much a factor here, where we tried to go away from the value high, then we came close to it. And this is where the standard deviation zone between standard deviation zone 1 and 2, like the lines, I'm not using it to run a momentum trade. I'm using it to run a mean reversion trade in cases where the market doesn't quite smash the Asia low, and then it just starts reversing away from it. So one thing that I did see is that it was starting to slowly reverse in after the Euro close happened. So I figured, you know what, I might want to run a nice long trade. So I got involved during the lunchtime hour. My two entries, so one was at 38.90.9 and the other one was slightly lower, primarily because I wanted to be in with 2 contracts, but initially I entered 1, and I'm like, no, hold on, I need to do 2. And I was doing other things, so my brain was a little bit all over the place. However, the trade was basically a bounce from ballpark value high area with the help of the standard deviation curves. And yesterday, as I was doing this trade, the big contract had the VWAP literally right around this top of this range. And that was the first trade. So standard deviation from VWAP, value high up to VWAP. And that was it. That was all that the market gave me. And then, as you can see, it actually did go down post-settlement. So comic settlement is at 6:30 p.m. my time. They did a classic fade after, but I wasn't in on that. And then they hit the value high, but for me, that was already too late. I don't really like trading gold that late, unless we're in a crazy trending day. And then in that case, I will do these late trades. They're just going to keep going and going and going. And for that purpose, I will use like the nearest GEX level. So whatever's around there, if it gets touched, I just jump on it and I just wait for the market to keep pushing. That wasn't the kind of the day. And my voice is breaking. That's weird. It is early morning though for me. And yeah, so I did not feel like I should be in this trade, but it was still a valid value high reversal. And again, all the way up to VWAP. So literally same thing. Now, the next trade that I attempted was the copper trade. Wasn't really sure about it. And in the end, it wasn't a great trade. I saw that it was again, a little bit too late. I saw that it was touching Asia high, and on a 5-minute chart, we did have one big massive spike. Let's go and find it. compared to the volumes that we had around there. So one thing I'm going to do, just give me a second. So when this whole thing was happening, I was watching how the prices were behaving in around this area. And even though there was not a super massive spike, there was a little bit of a spike here. So I thought to myself, well, we came back to Asia range. Maybe, just maybe, I have a tiny trade to basically go down to VWAP and the COMEX value high, which were literally at the same spot at that point, but it never really happened. So they just ambled around, didn't really do much. I held it all the way almost to for the auto liquidator, but you know, it was a small minor loss. I think it was about minus 0.4 R or something like that, so nowhere near -1, maybe even 0.3. So it was a very small small hit on the chin. Now, the trade that I did on RBOB, I was actually on the stream on the main broadcast with Joe from my VIP group, and we were on with Jack and Dolby. So I did a RBOB long trade. Now, the whole day on energies was really quite meh, and it was a very neutral day type. I think even crude oil, I don't even know whether it actually extended the initial balance yesterday for NYMEX. It did, but promptly like failed the auction. I did not want to get involved in that. I was looking at RBOB and then saw that we kind of settled in this range. Similar thing, very small trade, post-settlement fade to VWAP. So that was, I don't know, some 30 to 35 ticks. And that was it. That was all the trades that I did. So fairly standard sort of range day play, where anytime they compress the volume, and obviously there was a caveat here as well. If you noticed this massive spike, this is actually what pushed me into it. If we didn't have a huge volume spike here, I wouldn't have gone into it, because it's anyone's guess whether we're going to go lower if you don't have this exhaustion volume bar. But because of the exhaustion volume bar, as we were on the broadcast, I think we were doing like a news segment or something, and I saw that, so I was like, you know what, this is probably a reversal. And, you know, post-settlement, we've got 5 minutes, let's do it. And yeah, so it was a very drama-free trade, very drama-free. So most of the theme of the day yesterday in my products was smaller trades and just grab whatever you can when it reaches the volume weighted average price and bail, run for the hills. So hopefully that's helpful. I know that some of you asked me to do the recaps of the trades that I've done. So that's what we're doing. And yeah, 3 trades. I don't know. It was a pretty normal day. Not too much happening in precious metals and energies. And classically, for the inventories, crude oil did absolutely nothing. So that's what I played, a range. But as always, I was watching crude oil and then using RBOB to express my views of where I should be trading. Today, from the energies markets, we do usually have the inventories for natural gas. So maybe that's something to have a look at, because natural gas is not as useless as crude oil for some reason. Whenever it has inventories, it actually has some pretty nifty moves that follow it. But let me just double check whether we do have the inventories today, because sometimes they like to change stuff. So calendar. Yeah, so natural gas storage, 3:30 p.m. UK time. That's, I believe, 9:30 Central, I believe. An hour before the London close. So if I do anything with natural gas, I'm going to wait until after the report and then see maybe if I can find a trade into or right after the euro close. it's a strategy that I use all the time. So I have, the same levels, same everything. It's just the time of day needs to be correct for those types of setups to work out. With that out of the way, let's do some analysis on what Asia did today. And just to clean up my chart, I'm going to get rid of the chart executions to have a clean slate and to make sure that everything is ready for the new day. I'm going to move to the 30-minute time frame. And again, today I'm going to try running the bots. We are in training season. We need a Dua Lipa song then. There. All right, so what do we have on the Asia high? Well, we're kind of tagging it now. Let's put this as Asia high. Or, let's call it overnight high, because the way I use my my overview of these levels is that they will move until LME begins. And depending on what you're trading, sometimes you can also have the entirety of the London session as well until COMEX begins. I consider that overnight range as well. So I just call it overnight. Where is the value area from yesterday on gold? So we have 38.99. So literally where the Asia high is, overnight high. So this is actually COMEX value high as well. And then, so we're not going to need this today. COMEX value low is 3887.4. The average range is quantitative extremes, very important. 3851.8. To the downside. And upside, we have 3925.6. This is the old Asia high, so we don't need that. So that's what gold looks like today. For any kind of volume readouts, I will always have the main contract, not the micro, because that is where the market makers operate and where the institutions operate. They don't use micros. Okay, so if you're going to do any volume analysis, that needs to be done on the full contract always. Sirius wants to know which indicator you have above ATR. It's ADR. Now ADR and ATR are similar. The way I use them by multi-day sessions. I do not use that as a running average on the current time frame. I only use the ADR as the average daily range over a number of days. That is what brings me the quantitative extreme. So basically, how many ticks did this product move over the last 10 to 14 days? And then you can plot those. But the way I plot them, they are actually pretty lively. They don't just plot, the open, Globex open, and then high and low. It's a starting point, but then from that point on, it actually, I have an indicator that tracks, it's my indicator, by the way. It tracks the average number with every new high and low. So until one side of that gets exceeded, that is a true exhaustion, effectively. I know that there are some people who have tried to copy us on TradingView, and they just basically take half of the ADR from Globex Open, and then they put half of it above and half of it below. That's not the ADR. That's not the exhaustion. That's just, to me, that would be more like range trading. That would be like fixed range. And good for range markets, very good for a day when you don't expect things to move past those reference points. And on my core charting platform, I actually have these lines. So let me just maybe get rid of some of these so I can show you just the lines. So here they are. This is the average session range for the London session. Same thing. So looks at just the RTH or the London session or whatever the active session is. It will actually track how much that session is moved. And then I also have this nifty tool that can show me where the exhaustions happen, how the markets behave in regards to those areas. So here's a day when the average session range for COMEX brought us a nice reversal to the upside. So it went up, but ultimately it was very contained. So usually I need to have a slower day to use the average session ranges, or an outlier day where the normal average daily range is totally smashed and ignored, and then you have another reference point when the next session starts, rather than relying on the overall 24-hour range. So yeah, and to me it's just like a few clicks on the button to see where all of these levels are. Very handy, very handy. All right, let's move on to copper. Copper seems to be moving quite a bit for Asia these days, so maybe there's something in there today, but I prefer to trade copper earlier when we've got like CPI or PPI incoming. Outside of that, it seems to be pretty quiet still. Not necessarily a bad thing. I quite like slower moving products. But yeah, let's see where we are. So right now, that overnight high is located at 496.95. Now with copper, I like to track kind of the entirety of the moves, highs and lows, until COMEX opens. Sometimes I will use LME as well. So instead of tracking the bot all the way to COMEX open, I just track it until LME open. And then if there is an exhaustion spike above or below the nearest high or low from the overnight session, that is usually a false breakout. But right now what I'm seeing is that we are growing in volume from the opposite side of this move. So after a pullback, it's been steadily growing in volume. Do I want to try the reversal? Probably not. And there's also another issue with copper, is that we are sitting inside a very weak structure. So I'm actually a little bit long biased on copper here, especially early on in the day. So if anything, if copper goes higher than the overnight high and closes without meaningful candle wicks, obviously supported by some volume on pretty much all time frames, but I think this is probably, the rise in volume is probably the most visible on a 30-minute time frame. 15 minutes is a little bit choppy. Let's have a look at 5 minutes. Yeah, and then on 5 minutes, we're kind of falling away from it. So if this looked a little bit more committed, this is all a bit sideways and spiky. So I wouldn't say this is the making of a strong trend. But if we take in the longer time frame and we don't nitpick with stops, and we use stops that can maybe handle some of the wiggles and wobbles, maybe, just maybe, there's something to be said for copper going into a further upside move past that slight reversal that we had on the 25th of September. But another thing can happen. You can have all of this move effectively as a fake out, and then they take out the previous high and just smack it back down. So at the moment, I don't really have too much of a bias on copper. I'm willing to consider both sides of the story, because even though this looks like a strong trend, if you look at how volume on the daily is, it's actually falling. And it's like, that's not a good thing to see. For a true volume, you need to see it growing. You really need to see it growing. So here's an example of that here. So as we move away, it basically does one big one, then kind of goes into a slight pullback. But then over time, the volume grew until, again, there was a bit of an exhaustion candle. They look slightly different on the daily, because there's like so much trading activity that goes into the daily candle, so you're not going to get, big exhaustions necessarily that look the same as they do on the 5-minute chart. But yeah, so far I'm open to both sides of the story on copper. We'll see where they want to take it. Having a look at the energies markets. So let's maybe have a look at natural gas, because that is what is on the cards today with the inventory report. Deleting all the old levels, starting fresh. Let's have a look at the... Actually, let's have a look at the monthly chart as well. Sometimes it can provide some pretty interesting clues. You're not going to trade from a monthly chart, but directionally it can actually provide you clues. Well, I think that we are in... It's very early days. We just started this month, but some signs of life to the reversal side. So maybe a 3-bar reversal at some point. We're coming into colder months of the year when natural gas demand naturally increases. On the weekly chart, similar story, right? So we had an agreement in price, so some kind of a consolidation. It's trying to resolve the consolidation to the upside. So if that happens, there's all chances that we do have a little bit of space until we reach 3832. And that is actually a little bit of a low volume node, so I would expect at least some sort of a reaction. Whether it's momentary and sustained remains to be seen. But usually when you have a low volume area, what tends to happen is that on the first try, they kind of pop into it and then reverse. We also have a very nice looking supply with a strong move down and a very clean drop. And the risk reward profit margin is not too shabby if you're going to look at it from the swing point of view. But because of the time of the year, I don't really want to run short swings on natural gas purely because of that. There's definite seasonality to this product. All right, so let's have a look at the daily chart. Daily chart is increasing in volume for the buyers. Certainly interesting. And now I'm going to drop down to a 30-minute time frame. Again, Asia, not really much of a thing on energies because it's an out-of-hours session. I don't think that there's like 5 people in Asia that trade energies. Gold, precious metals, metals in general, they are a big thing in Asia and Australasia as well. In fact, Australia is one of the bigger exporters of gold, which is why you see it doing a lot of stuff overnight. But energies until my 11, 12 o'clock, so until my noon, and I am in England, looking and analyzing it like Asia high, Asia low, on most days, it's a meh, because there's not enough of a range there. So I don't do the Asia high, Asia low. That's a metals thing, okay? On energies markets, I literally just look at value areas, quantitative extremes, GEX levels. And then from there on out, my fourth condition is the time of day, which is always the case, but yeah. So let's have a look at where those are located today. And, they are subject to a little bit of change when it comes to the average daily ranges, purely because they will move with every new high and low until they're exceeded. But there is a starting point. And, I mean, they don't move that much. It's not like, oh, with every tick they're going to move. But if they, for example, if we go above 3461, that might actually move the lower side of things higher. So if it smashes all the way down, that ADR low is going to inch a little bit higher throughout the day as there's a little bit more movement. And that's going to keep happening until one side is exceeded in the name of the average range number. Okay, so we are currently sitting inside the value area from yesterday's NYMEX activities. Looking at the distances between the value areas, so I'm just going to show you quickly here. They are starting to move higher, right? So this is what I saw even on the daily chart, but the value area is also telling me that we're starting to move higher. The values are slightly expanding when it comes to the size of them. So that could also be an indication of an early trend up. But today we are looking at a pretty sizable value area. We're still going to put them on the chart. So value high at 3477. And I'm going to change it to purple because I am just used to my values being purple for some weird reason. Don't ask me why. Value area low is sitting at 3360. As it stands now, the average daily range high is 3538. Average daily range low at 3340. So we're right sort of in the middle of the value. I would like that to change. If we stay inside this whole value area, I might be defaulting to some arranged trades ahead of the release. So remember, we have the inventories today on natural gas. And then maybe after that, if we have some sort of a breakout of this whole thing that we have going on today, maybe, just maybe, I'll run a bigger trade, whether that's going to be, you know, with the trend that I think I'm seeing, or whether it's going to be failed auction. Really depends on the time of day and how the whole market sets up. But these are the orientation points. They're just levels, and I have hypotheses that I can come up with closer to NYMEX time. But for now, I'm just going to sit and observe. And another thing that I do for natural gas and energies markets, crude oil in particular, is to look at where the GEX levels are located. So let me just load them up. To see exactly where they are today. Now, this is the end of day options chain, right? So just keep that in mind. We have a gamma wall from the 0DTs. So that's like very short-term options at 3,450. I'm going to make them solid. And I'm going to say 0 DTE, call resistance, and gamma wall. What does that mean? It means that there's the highest concentration of open interest at that point in the options chain. How do I expect that to behave? Well, if we are in a negative gamma environment, I expect them to actually not be reactive. So in fact, I wouldn't be surprised if this acts as an accelerator. Let me check whether we are in a, from, you know, the readout yesterday, whether we're in a negative or positive gamma. And then we can have a look at HVL positioning, but I think we should be in... I mean, natural gas tends to be in negative gamma a lot of the times, but let's see. Just loading. Yeah, so gamma condition negative. Now there is a possibility that we start going down, right? It's natural gas, so sometimes it does have that downward bias. And I don't know how cold it's getting, but if it's not yet that cold, then the shorts on natural gas intraday are pretty good. We have a couple of areas to the downside. So one of them is GEX1 at 340. And then another one, a put support area from the 0DT. So again, very short-term options activity at 3350. To the upside, we have GEX3 and GEX2 sitting at 355 and 360. And that would actually be a little bit more along the lines of what I'm looking for. So the GEX 2 and 3 are basically levels with a, how would I put it? With enough open interest to be interested for, be an interesting area for market makers to hedge from, but also not so large to cause either a gamma flip or to cause an acceleration, especially if you've had a very extended move up to those levels. So the longer the move is in the run up to GEX 2 and 3, the less likely it is that it's going to act as an accelerator outside of some sort of a massive catalyst, you know, some sort of a speech or a big release. Monetary policy for equities is something that affects equities and gold a lot. Natural gas, the only thing that could affect it is maybe like a hurricane. so some sort of elementary disaster, then it basically goes crazy. And in those cases, yes, you will see that negative gamma environment really take hold, and all of the levels just going to bleed through it. So 355, let's pop that up here. X3, and then above it, 360. Here's the all important GEX2 level. So yeah, if we maintain the negative gamma environment, then I would still be looking to at least take profits if I find a trade in the run up to it. If I don't, then another smaller option would be that we go above GEX3 and ADR high, and then effectively use those to run a 50 tick move up to GEX2. So not fighting the trend, but really just looking for, you know, run through and then a bounce from the nearest GEX level. And that's one of the ways that I found doing continuation trades much easier for me. I used to struggle with trending days a lot. In fact, they were my worst performing days ever. But yeah, so that's how I look at the energies markets, and I think natural gas is where our focus should be today. PMBM says, do you really get useful information from volume indicator with iceberg orders and dark pools not being reflected in it? So what do you think these are? Do you think these are? I also have Bookmap, mate. So I always have Bookmap on. I'm pretty decent at tape reading, although for something like copper, the tape is very slow. So you don't really need it by the time that you see. And again, you're probably new here. I am not a scalper. I look for bigger chunks of the move. A scalp for me is 30 to 50 ticks. That's a scalp. D-type scalp, right? Most of the time, if I feel that there is a, like obviously context permitting, I will look for the moves that will bring me the biggest chunk, whether that's a failed auction of some sort. And you can see iceberg orders coming in on Bookmap. Okay. However, when it comes to exhaustion type stop run and reverse trades, you don't need iceberg orders for that. All you need is a big exhaustive candle on the volume bars and then a close back into the range. That is the only thing you need. So if you're staring at iceberg orders at that point, to me, that's overkill. There are times when iceberg orders are very useful for short-term scalps, where you kind of skim 5 points and you run away. I never do that. I'm, you know, very familiar with tape and how iceberg orders look like, what sweeps look like. And yes, there are times when I will use them to initiate a position, but the things that I'm looking for are much more longer term. And I still trade intraday, but I want to time. So here's the problem with finding swing trades that will last. First, you need to make sure that the sentiment on the day has enough of the imbalance in order for you to look for a bigger swing. Second of all, you have to be super selective with the type of trades that you take in order to grab 200 and 300 ticks over 5 and 10. And number 3, if you are in a range-bound day, I will not, like you saw yesterday's recap, I was not looking for any bigger trades. So all of them were my types of scalps. I define a scalp by the number of ticks you take, not necessarily the time that it goes by for how long you'll hold the trade. So if you're holding a trade for like 3 hours and you still only manage to get 5 ticks out of it, that's a scalp. If you hold it for, 1 minute and you get 100 ticks out of it, to me, that's not a scalp. You managed to identify a big opportunity. And to me, that's been invaluable for setting the right types of playbooks in my head when I should be looking for longer chunks and when I should be defaulting to basically just not doing much. And I use the auction theory combination. I use options levels. I will do more tape reading on range days because that requires a lot more precision and timing needs to be impeccable because your profit margins are just not that big. But if you're looking for those intraday, as I like to call them, semi-swings, where you are coming away from, like natural gas, for example, we're coming away from a big demand area potentially on the weekly chart, and that can bring much larger profit margin because really you don't have just up to ADR. If this thing starts turning around and pushing, the turnarounds from previous demand areas tend to bring the highest probability of, or highest frequency of, single direction days. So why would I take 10 ticks when I can take 300? And why would I lose my eyes staring at iceberg orders if I'm looking for a bigger chunk of the move? Doesn't make sense, does it? But hey, you've got your style, I've got mine, and everybody can make money. It doesn't matter. It's just I know what's worked for me for 18 years. All right, let's get back to the development. So yes, I do find all of the use. And if you're talking about dark pools, that's the options. It's not like people call them, I don't know why they're called dark pools. It's like they're there for everybody to see. If you know where to look. And the market makers are not some big bad wolf out to get your sim stops. They are there to maintain delta neutrality. I really, really dislike when I hear people going, oh, market makers got my stop. It's like the market makers don't care about your stop. It's like most of your trading on a sim anyway. And do you think they're going to know where you place to stop? And the only reason why you might think that the market makers are hunting your stops is because your stops are located in a really terrible place. So once you fix that, and once you stop looking for market makers as an excuse as to why people are not doing well, like we had that yesterday, we were talking and somebody in the chat during the main broadcast, when I was on with Joe and with Jack and Dolby, someone was like, and the market makers, they always get, and I'm like, just shut up. It just always makes me laugh. He said, any excuse. And then we had another person who was saying how on a day when NQ goes into a beautiful, beautiful uptrend, and they obviously weren't able to do it. RJ was his name, if I remember correctly. And he was like, this market is shit. And I'm like, well, what market isn't shit for you then? Because, range day is not good. Massive trend day isn't good. Like, what are we never happy? Like, what is the deal with that? We need to recognize when we need to get better. If you're not good at trending days, that's your Achilles heel. So that needs work. For me, it was range days. I sucked at range days for 7 years. But I recognized that, and I was like, okay, this is something that I need to work on. I'm never going to say that I'm the best range trader, but these days I'm perfectly able to get ahead of myself, which always looks for, like, my brain always looks for mean reversions because it's just how I'm wired. I'm a contrarian by nature. I'm left-handed, and I do everything a little bit topsy-turvy. So for me, I would be looking to fade things in a trending move. And then I realized that I was getting hurt by that. So I worked very hard on finding the continuation. And the only way that I was able to do that is either looking for tests of the initial balance post-breakout, so initial balance edge post-breakout, or if we've already gone massively high, to just look for a GEX level somewhere there and look at how the price behaves on Bookmap when we arrive there, and to make sure that there are buyers that are stepping in at that point, and then I will go with that momentum. That's the only thing that's worked for me on trending days when I'm not in already. But most times I will already be in by the time that the initial balance break usually happens. I've already either identified either a value high or maybe an average daily range low, or some kind of a way that I can already enter the trade. So when the big push happens, D is usually already on that. And that's the difference, I think. So I'm not catching some weird momentum on a break. I'm catching it before it happens and when the volume is slowly building. So yes, to me, volume is just a small piece of the puzzle, but most useful if I'm looking for a stop run and reverse type trades. And I don't need to stare at bookmap for that because I can see it on a regular volume on a 5-minute chart. And I don't like using anything less than that. You can argue that bookmap is the micro order flow. And when it comes to looking at the inefficiencies on the dome, I would just use the dome. Like if I just want to swipe something, even though I don't like doing that a lot, I think it sups a lot of mental capital for no real benefit to me. I'm a lazy trader. I want to do less trades and I want to get as much ticks out of it. I don't want to do too many trades or loads of trades for a tiny amount of ticks. So this is where I'm completely the opposite to most people that I've seen. There is this misconception that you have to do a lot of trading, primarily because I think we're wired and we are taught that more things, more hours worked, you know, more work done, you know, project, advancing project, more lines of code, that will bring you more money. Because it does in every other industry, right? But trading is the complete opposite of that. You do 100 trades a day. If you're a relatively novice trader, you're trying to be a scalper, but you don't have experience, nor do you know where your edge exactly lies, because usually you don't have a big enough sample size. So that's a problem in and of itself. And yet people still try to do 1 million trades per day, and they're like, oh, it's not working. And it works partially. You know, you get like 1-2 days, maybe a week of good trading, and then it all goes to shit. Why? Because your risk of ruin is too high. Very simple, right? So to me, I'm the opposite. I look for more chunks of the day if the market gives it to me. If there's a range-bound market or conditions are not very good for my swing type trades intraday, I will then turn to range trading and will try to still swipe as many ticks as I can. So I will make sure that the profit margin to whatever problem area is at least has 35 ticks in it. I will not get involved for anything less, okay? So hopefully that makes it a little bit clearer as to why I look at the market in a certain way. Yeah, Fisher Transform is the, yeah, Cactus Leo says Fisher Transform. Yeah, I do have Fisher Transform there. It's something that I use in my bots. Usually it's for a trending bot. So I just wanted to see how it's doing things. But you see, right now, to me, this is like heavily in territory of if you're going to look at Fisher Transform, in territory of effectively trying to turn around. And it's maybe even that is telling me that natural gas needs to go higher. But it's just an oscillator, you know, it's not like price action based. An oscillator there for me is just to ensure that the bot is not going completely, like if I'm going to go into a trend, I don't want to see Fisher Transform already up at like +4. I want it to just be crossing over 0. And if it's too deep in the hole, minus, that's probably not a good situation for a trending move. Because this is a divergence for sure, but really Fisher Transform, the way I use it in the bots, is that it needs to be sort of breaking out of something and already trending, but I also want it to be relatively neutral to catch that trend early. Because it's a different way when you're trading, when you're doing trading bots, you can't do what a human does because it's not that flexible. And if you put like 1 million conditions attached to your bot, it will never trade. It's just going to be like, well, it's clashing. The logic is clashing. Or one bot will do one thing and then the other one will try to enter and they will cancel each other out. So you have to be very careful with that. So the way I trade as a manual trader and the way my bots are created two completely different things. And you can never entirely replace yourself if you are a trader who's maybe a little bit discretionary. Because I'm systematic, but when it comes to entries, I am still very discretionary. And I actually came to realize that when we started working on algorithms. Because I was being asked questions by my team that I never thought I would be asked. And they're not traders, right? They're just, they are developers. And the first time that I realized that maybe I'm not as systematic is when we were making our supply and demand with Q points, which are quartile points. So kind of similar to Fibonacci, but they're simpler. And in fact, one of my VIPs said that I should call myself Lady Debonacci because it's a twist on it. Very simple, but still looks at the established swings. And I call them Q points, right? So I wanted us to figure out how to scan the established swing, right? So I said, well, you know, you find the high, you find the low, you find a 50%, and then that becomes the trigger for the top and bottom quartile. And the developer goes, so how do you know it's an established low and a high? And I went, so, and then my brain tried to default to code, and I'm like, oh, that's a big problem. Like, how do you explain? Because if you've got multiple highs and lows, right? So if you've got one really close one, but then there's another one higher one, and then let's say you're sort of in some sort of a wedge formation, well, which low do we have? So we actually took probably about 2-3 months to solve that. And what we did a look back function to see whether there was sort of a pre-swing to it. And I mentioned this in my pro dev program, and whenever I talk about it, people who are not particularly technical, they get really hung up over it, and I'm like, don't think about it. It's just like a means to an end to find the relevant high and low. You're a human. You don't need that. You look at it and you naturally see whether there was a, you know, swing before that or not. Because, you know, if you are a bot, you can easily go, if you don't have this extra look back function, you can easily go, well, this is the nearest low, right? But to your human eyes, this is a consolidation. However, the bots don't work that way, right? So they would be like, well, this is the nearest low. Like, no, that's a consolidation. So you really need to have something like this happening. So pre-swing, look back, to have a significant enough of a wave before the low gets established in order for this to be relevant as a swing. So we had to create that. And it was hilarious because I was like, my God, I can't believe, you know, that we're doing this. This is... explaining to a machine such a simple concept, right? All right, so let me just go to the pull contract GC here. It's struggling around this COMEX value high, and on a 15-minute chart, where are we? We still have wicks on a 15-minute. I don't like that. Because I was thinking maybe we can run a long on gold here. Don't like to see wicks. So if I'm going to do a breakout, the wicks cannot happen because it means it's not like somebody's still fighting this overnight high. Volume slightly diminishing on a 30-minute time frame as well. I might wait for another half an hour or until we get like closer to LME, and then maybe, just maybe, there's a long here, especially if we manage to defend value high from COMEX. That could be an early development. In absence of that, I'm not seeing any exhaustion. I don't think there are any exhaustion candles. No. And the return to Asia is just meh. So for now, I don't have a very good setup there. The conditions are not all there. And if anything, this could be just a slow start to the upside move. The initial balance has also been just barely closed on the high. Strength of the auction. We have 3 TPOs already, so this is not the strongest. If it's going to go, and actually 4, if I look at earlier. Now, the auction to me is just like, meh. It might still be a slower move up. Might be a slow move up, but I'm not that happy with it. Maybe because when I look at the London session, we did actually open below value. It's not a main session, so it's not that relevant. But maybe if we close inside the value area, I can maybe swipe 124 ticks on the full return in rotation through value. So that's a hypo. It's in progress now. Just kind of running you through my thought process here. TestNext is asking Project X and Topstep packs can be used on Mac. Only if you're going to run something like Parallels or is it Boot Camp? You effectively have to run a Windows OS on it. So there are programs that will give you the dual boot, so you can pick whether you're going to go into Mac OS or thingy. I don't use Macs. I've always been a Windows person. In fact, I have a bit of a personal dislike for Apple products. If you want to know why, when I was a musician, so I started doing music in 1996 electronically. Okay, I was still a teenager. I was 16, and it was amazing because I was like, awesome! I got everything for my computer. I was using this pretty nifty software called Logic Pro, and then Logic got bought by Apple, and they made it Mac only, which I absolutely hated because, first of all, I lived in Belgrade then. That's where I'm from originally, even though now I've lived in the UK for longer than I have over there. But yeah, it was not great because I couldn't really easily get a hold of a Mac computer. Back in those days, we were under sanctions. So that was fun. And you couldn't get any of the software anymore for Windows. So I had to go and learn a whole different platform. Hated that. Absolutely hated that. And because of it, I have never owned an iPhone. I have never owned a Mac. Literally never owned any products. Right, let's try a tiny little MGC trade here. Because again, it's slightly wrong time of the day for me as well. So I don't want to put a massive dent in it. If it doesn't happen, we only lose 35 plus the commissions. Usually I like to do my trades closer to LME or right after LME. But, you know, let's do a tradertainment trade. Tradertainment, do a clickety-click of a button. So yeah, I have a huge dislike for Macs because of that. It's a personal issue. A personal issue. All right, these need to push it really quickly, otherwise I don't really want it. Come on. Yes, these wicks that are annoying me. Wick. So whenever I'm trying to do a breakout trade, having wicks around is not great. It means that I would need, you know, a bigger stop loss, which is why I'm in just like 1 micro, just so that I appease the trolls to say, well, never see your trade. Yeah, never see your trade. Well, there you go. Tradertainment. Tiny little trade here. Bruno says, the only Mac I like is the Big Mac. Yeah, I used to like Big Macs. Now I can only handle the fish Chick-fil-A because I've got mast cell activation syndrome. Lovely side effect of the back injury. Okay, let's have a look. Motive wave works well on the Mac. I mean, motive wave works well anywhere, right? Khadija or Kadia? Like, am I pronouncing your name completely wrong? Because I see you in here a lot, so I want to make sure that I'm not mispronouncing your name over and over. And my Serbian brain sees J, and I immediately pronounce that as a Y. You have a question that says, when you reach your level of entry, do you wait for a 15-minute candle to close above before entering? So it will heavily depend on the setup. If I'm looking for trending moves, I won't bother with anything less than a 15-minute time frame. If I'm looking for just a stop run and reverse, the bot will look for the 5-minute close back inside the range. I look at Bookmap, and then as soon as I see an exhaustion volume candle, I will actually front run that trade because I've done it so many times, and I know that a lot of the times when you have the big candle on the volume bars, the reversal immediately follows. So in a way, I will assume that that's what's happening based on my own experience. But again, a bot has different conditions, and sometimes I don't use a time frame at all. Sometimes it's just me looking at how the price action is behaving and going along with whatever the Bookmap is telling me, and tape is telling me that, you know, things are looking pretty solid and there's more interest arriving and everything is looking like it's growing in bids effectively if I'm looking for longs. And volume is following, right? So I'm not seeing that here now. So this is still a huge tug of war. Let me have a look at the 5-minute chart, see what's going on the main. I mean, they're certainly trying. It's just we're in that weird time period where, yet again, we've completely consolidated. But one thing that's kind of pushing me into this is that yesterday we were looking at the gamma wall that is still at the same spot, and it acted as a support. So it basically, price went above it, then we sort of consolidated around it, and then it kind of started jumping away from it. Ultimately didn't hold that move, so it kept running through it on the day. But today, until we fail the auction, which is where my stop is, I will deem that the return to initial balance, and I don't really want this. As long as we're attempting to hold above that area, and just for posterity, the initial balance high is exactly at 38.99.6. So basically where the Asia high is and where the COMEX value high is. So if we can hold above it, we might have something. Is it too early for this? Yes. But don't want anyone to say that I'm not doing any trades in my live account. So I'm doing 1 micro. Are you happy now? Because I'm not going to derail my full P&L for the day just because somebody wants to see me trade. Live account. Okay, so English pronunciation of the name can be approximated as Khadija. Okay, so it is Ja. With the initial K sound similar to the K. Yeah, okay. So Khadija, right? Okay. Now I know. Khadija. Logic, one of the best DAW. Yeah, except it's only a Mac. I use Cubase since 1993, and then before then I started messing around on Atari. That's how old I am. When I was a kid, rotary phones were still. We actually had one in our house. You know, the big The digital only came later. Yeah, I'm very old, guys. The Granny D over here. And the funny part is everybody's always like, oh yeah, Dee started trading when she was 2 years old. And I'm like, yes, of course. What sort of drink can I get you? So let's see. Infinite fracture. Did I miss something? Infinite fracture. Hold on. Hello, guys. After a 50K combine account, what happens? You go into something called the Express funded account, which is still a sim, but you can get payouts from it, which to me, when I first became a prop trader, is as if I've walked into some sort of a strange Twilight Zone version of things. If somebody told me back in the day, yeah, you can trade demo and get real money out of it, like, what? But yeah, and yet today that seems to be a thing. So, but once you pass the combine, if you've already passed it, then you go into an XFA. And these days, even if you mess up the XFA, there is a fairly cost prohibitive version for a lot of people to get back to the funded stage if you mess up before your first payouts and learn what not to do. Or you can just go back to a combine level and try again. And a lot of people will fail at the first try. This never used to be the case. And I do believe that this new culture that we have, more copy traded accounts ahead of time before you actually prove competence, more sim farming, more this, and then you get into a live account and you realize things are a little bit different because the fills are not instant, the slippage is different, and sometimes much harsher than whatever you might have experienced in the sim environment. And then people start blaming platforms for that. It's not the platform. Like, you just cannot, like, some people trade like 5-10 contracts per account for like 20 accounts and they get instant fills. Like, that's just dreamland, total dreamland. I'm glad it's an option. I'm very glad that now, you know, the entry into the whole prop world and everything is so low. But to me, if somebody told me that you'll be able, like, imagine opening up a demo account with AMP or something, and then you trade and you do, you know, you make some money, and then you get to, you know, you tell support, right, so I've done some really good demo trading. I would like to withdraw this money, please. They will just tell you to F off. Like, what have you been smoking today? And yet, that is what the prop firms are these days. I mean, it's beautiful, right? It's great, but it's a little bit odd to me. A little bit odd. TraderCan says, NG so slow that I might master for my, before my, that I might, what? Before my take profit. So I don't know what you're trying to say there, Ken, but at this time of the day, natural gas is very slow. Very, very slow. It will start sort of waking up in about an hour or so. When we get closer to sort of a couple of hours before NYMEX, it sort of starts moving. Some days it will actually move more during London than it does for any other. Oh, come on, gold. Jesus Christ. This is why I hate gold at this time of the day. It's like it gets stuck. Just a crazy range and nothing is happening. It's like, what happened to this? Why? Because they're waiting for LME, right? We're in a very weird time of the day. Most days gold is just going to get stuck in a range and it does absolutely nothing. Absolutely nothing. Luckily it's only 1 micro, so if I just get a little bit of a push up above here, I will close this because I'm not going to waste my mental capital just watching paint dry. Let's see. What Eric 1M says, what are your thoughts on orb opening range trades? I don't generally like them. Personally, I think they are mentally very exhausting. The price action at the time of when the orbs need to be executed is absolutely bonkers, especially if you're trading something like NQ. But it's even crazy on energies, you know. When RBOB opens, everything just starts flying around. I, as an older person and a middle-aged woman, I don't like that anymore. I used to thrive on it when I was younger, but as the years went on, I was just like, you know, there is an age factor there as well, but also the number of years that I've been doing this. So we're coming up to almost 2 decades. And there's just some things that exhaust me. So orb, I will only consider if we're opening with, let's say, hypothesis. Energies markets almost in a permanent downtrend. You get to a day where we're opening above value for whatever reason. We pushed higher previous day, and maybe overnight has pushed it a little bit higher as well. So now you're sitting at a point where you have a short bias market, and you have a pretty decent chance of a short mean reversion happening on the account of a gap fill at value, basically. That's the time that I will get involved, okay? In fact, I will just look at it in the first sort of 2-3 minutes, and if there's any strength in there, I will do it. But I don't do that every day, right? In fact, that's some of the things, that's one of my bots actually for RBOB, to scan for the open at a particular point that is above the value, and then to just do shorts. That bot does not do longs. Why? Because it's lower probability. So yeah. All right, are we going to get a little push here, gold? Come on. Be a sport. So yeah, personally, I trade much later in the day. So I will trade usually around the euro close. Those are my favorite trades. And then into settlement. Those are also some of my favorite trades. I really dislike getting involved in the craziness of the open. If I look at my overall stats for like thousands and thousands of trades from my journaling platform, on average, the worst time of day for me is the first half hour of NYMEX, so between 2 and 2:30. I know why, because usually commodities like to do this thing called the head fake, and for years I kept getting smacked in the face trying to do orbs and then trying to hold them for something more. But they are, by nature, on most days they will be more scalpy. I'm not a scalper, so I would try and hold the trade more. And then get stopped out instead of taking, you know, a tiny bit of the pie. So yeah, I personally, it's a personal preference. Let me just make that completely clear. Personal preference that I do not like orbs. If you do, that is 100% okay. Obviously, it's if you revel in them, if you love them, you want to trade them, you know, hug them, kiss them, feed them, wine them, dine them, that is your jam. It's nothing wrong with that. It's just, for me, I heavily dislike orbs. So yeah, infinite fracture. To finish it up, you get a funded account that is still simulated, but you get to take payouts from it if you can generate $150 for 5 days. It doesn't have to be in a row. Either you can have one now, then you kind of mess it up, but you still kind of hold on to the account. Then you have one bigger day next week, and then you kind of string along about 3 or 4 days of 150. If there's some balance in there, you can actually withdraw funds. So yeah, it's pretty nifty. However, once you get to a point of the live account, that means you've been invited to what they call the big leagues. The rules of the game change. It's much more difficult, and you do get a loss limit that is introduced yet again on you, and then you effectively just have to almost like prove yourself all over again, unless they already know you. You know, I've been with Topstep in some shape or form for 10 years, so it's a little bit different for those of us who know everybody, and you know, there's maybe a little bit of nepotism there still, but you know, back in the day, prop firms and floor traders, it was all nepotism, so it's not nearly as bad now as it was before. Okay, just gonna keep an eye out on exhaustion candles just in case they decide that this has gone far enough. But so far, we are trying to grow in a bit of volume. How much time do we have? 15 minutes. Okay. The trouble is, I'm trying to read chat. I'm trying to keep track of this. And again, Granny D over here can't keep up. So you know what? I'm just going to kill that. There's just too many things happening. And I expected this to move quicker than it is. So I'm just going to kill it and wait for some better conditions in a better time of day. All right. Let me... Sam L says, Coach, you don't look old one bit. Thank the Botox for that. Yes. Age is just a number of the chart, but biological or physical age. Yeah, biologically I feel like I'm 200 years old, but thank you for that. Yeah. My sister says, we're not old, we're vintage. And I would agree with that. Definitely. Today's trader has it so good. I know, right? Jesus. Yeah. Yeah, that's right. For the XFA, do you need to reach buffer level before you can withdraw? No, there's no buffer level. The only buffer level is the 5 days. But there are... so here's the thing. When you take a payout and you don't have enough of a buffer in there, let's say that you are in a 50K account. So your drawdown is 2K. And let's say you generate 2K in the first week. So now your maximum loss limit is at 0. But when you take money out, that's all you've got left. So it's very, very tight. Therefore, for me, the way I manage my payroll in the beginning stages of new funded accounts is to never take out more than 20 or 30% of whatever is in there. But another problem that I've seen is that people trade for 5 days and they generate 750 in profits. And then they withdraw half of it without realizing that the maximum loss limit will not stay where it is. It moves to 0. So that's what Bruno is saying. And in that case, you now only have like 400 left to play with. Not great. So manage your payroll correctly. There is definitely something to be said for how people manage their accounts. And to me, I'm old school. So generally, I start out by never taking out more than 20 or 30% of the account balance. And I think back in April and May, you've seen me do withdrawals on the main broadcast. And that's exactly, how you should be doing it. Not taking everything, but generating a fair amount in there. I don't even think about withdrawing until there's 5K in there. And then once I do the first withdrawal, usually I will try to reach 10K before I do the next one. So even after the payout. Sometimes I do really well. So for example, I think April for me, I think I made 30 grand overall. So obviously I was able to withdraw half of it, and then I carried on trading. I generated another 5 grand, and then 10 days later I was told that I'm being moved to live again. I was like, that didn't take long. I really hoped that they were going to leave me in there to generate at least 50K. But it was not to be. So yeah, it is what it is. It's okay though. Managing one account is kind of a bit easier than managing 3. Because I had 3 XFAs at that point, so yeah. Anyway, let's move on. So yeah, this gold, it was the right decision to get out of it. It's not really, it's not exactly screaming to the upside, is it? But it was the right one, right? I'm not going to short it here because we're above the overnight high. We're above COMEX high. That is a little bit of an imbalance developing as we kind of try to head into the later part of the day. And close to COMEX. Still very close to value. So it's anyone's guess whether this is going to open up above, inside, and how far, inside or outside. So yeah. RBOB is probably going to start moving a little bit. What I like to do with RBOB sometimes in that pre-market state is if it had a nice, and again, this is me being such a bear on energies, if there was a good extension upside for the London session, and then they kind of bring it quite high up and maybe exhaust the average session range for London, I absolutely love shorting those into NYMEX Open, but I will typically just short it, get about 60, 70 ticks out of it, and then just sit on my hands until after NY cut is done, because that's the time when the energies like to turn around. And then I might try again. But that's on days when I'm looking to trade a little bit more. I have been struggling with some health issues recently, so I have to conserve my energy and make sure that I can still do my job and trade and everything. It's also one of the big reasons why I want to translate some of the things that I do outside of Topstep with algorithms into the Topstep X API. So that's going to make things a little bit easier for me going forward. And yeah, exciting week. So we're going to try and run the bot. Hopefully the orders work today. And hopefully I get a setup, because right now there's maybe a trending setup, but the volume is not following. So that is not... the bot has a volume scanner. So for nearly everything. And if the volume is not growing, it is not going to execute a trending move, because it's deeming that there's not enough movement. And also, if the Fisher transform is at the very extremes on a 15-minute chart, you know, if it's like +4 or +2, it's also not going to execute it. So it needs some sort of a slight pullback in order for all of the puzzle pieces to match. Maybe I should write an initial balance, break, pull back, then enter. So effectively a SEEB, strength from inside initial balance. Those of you who are my market stalkers, you know what I'm talking about. SEEB and WEEB setups. And they're pretty good because it banks on an attempted move outside of initial balance, then a pullback, and then you fish for a continuation long. Much better. So maybe that's going to be the next spot, because that one is actually pretty simple. I wouldn't need the value area for that. I would probably just need that first hour of trading. So yeah. All right, everyone. I'm going to finish it up a little bit earlier. Today I do have some medical things I need to get to today and tomorrow. It's going to be pincushion D time for the next 2 days. But yeah, I will see you next week. We're still going along with the old time for now. We will inform you when the time change is going to come, but probably not for another couple of weeks yet. Anyways, let's save those profits. There's no NFP tomorrow, so we're off the hook. We're off the hook, so we can just change. We don't have to change anything. We can just trade as we normally do. In the meantime, enjoy the weekend. Trade safe. This has been the Euro Trade. I'm Marcus Stalker D. I will see you very soon. Take care.